Another tech celebrity weighing in. Last week it was Chamath. This time it is Elon Musk. And I thought to myself, you could hear it from Elon 2 days ago, or you could hear it on the Northern Miner podcast about 5 years ago. And maybe more. For those that subscribe to the Dines letter, we're actually going on 15 years since James Dines was waving the red flag on rare earths. And, many of you may not know who that is, but a legendary newsletter writer, what a thinker. I have a friend when I lived back in Montreal in around 2010 who was saying, Adrian, you called it on the rare earths way back then. And the reason I could call it was because I was reading the Dines letter. So hello and welcome to the Northern Miner podcast. My name's Adrian Pocobelli. Now, here is the tweet to which I refer. Elon Musk, April 13th. Important to note, what matters is the ability to refine rare earth elements, which are not actually meaningfully rare, and manufacture magnets for use in electric motors. People understandably tend to think that rare earth mineral deposits are what's scarce, given the name. That is false. They're everywhere. As with lithium, what China has that others lack is the heavy industry of refining the minerals. And this is exactly the point we've been making here for quite a long time. And so it's quite interesting. We have reached the promised land from a news media perspective. We have reached the center of the news narrative. It's actually hard to imagine us outperforming. I guess the best we can do now as a beat, as an industry, is to simply stay where we are. Exhibit A is, headline on the Drudge Report, which is controversial. Some people love it, some people hate it, some people used to hate it, now they love it. But all that being said, at times a pretty good temperature on what people are thinking about and concerned about. China suspends rare earth exports. And there is a Chinese flag superimposed on a mining site. I mean, again, I just say, I don't think we can really outdo this. All we can do is stay here in terms of an attention point of view and turn up the volume. But, the volume's pretty much at 10 right now. All we can really do is stay at 10. I would argue. Now, if you're like me, I thought, isn't this 10-day-old news? Because, of course, China restricted exports on April 4th in response to the tariffs being placed by U.S. President Donald Trump on China. Now, again, as I've mentioned, I actually don't think that's the main reason China did it. I think that was the excuse. And the reason I say that is because we've been following the situation in Myanmar, where China gets a lot of the same rare earths that they actually banned the export of. And as we're going to see here, their imports are significantly lower of these heavy rare earths, and their exports are higher. As with the tariffs, people are trying to stockpile, to a certain degree, the things they need. So China is probably trying to just protect their rare earth supply and using the tariffs as an excuse without making it look like, hey, we might have an issue supplying our rare earths trade. So let's take a closer look here to flesh this out. So New York Times put out a report on Sunday, 2 days ago. This is by Keith Bradsher. China halts critical exports as trade war intensifies. China has suspended exports of a wide range of critical minerals and magnets, threatening to choke off supplies of components central to automakers, aerospace manufacturers, semiconductor companies, and military contractors around the world. Shipments of the magnets, essential for assembling everything from cars and drones to robots and missiles, have been halted at many Chinese ports while the Chinese government drafts a new regulatory system. Once in place, the new system would permanently prevent supplies from reaching certain companies, including American military contractors. So I do return to this notion, is there any new news here? So let's see what they say. The official crackdown is part of China's retaliation for President Trump's sharp increase in tariffs that started on April 2nd. On April 4th, the Chinese government ordered restrictions on the export of 6 heavy rare earth metals, which are refined entirely in China, as well as rare earth magnets, 90% of which are produced in China. The metals and special magnets made with them can now be shipped out of China only with special export licenses. But China has barely started setting up a system for issuing the licenses. That has caused consternation among industry executives that the process could drag on and that current supplies of minerals and products outside of China could run low. So, to be frank, I don't see the news here. There has been no change in policy since April 4th, from what I can gather on this article. But I suppose what has changed is nothing is flowing out. So, from an official perspective, the Chinese government, as far as I can tell here, has not made a statement saying they're banning it. But the New York Times is saying, for all intents and purposes, there is a ban because nothing is leaving. Interestingly. It continues, if factories in Detroit and elsewhere run out of powerful rare earth magnets, that could prevent them from assembling cars and other products with electric motors that require these magnets. Companies vary widely in the size of their emergency stockpiles for such contingencies, so the timing of production disruptions is hard to predict. The so-called heavy rare earth metals covered by the export suspension, and we're going to see here in a second that those are a lot of the rare earths that are being mined in Myanmar, are used in magnets essential for many kinds of electric motors. These motors are crucial components of electric cars, drones, robots, missiles, and spacecraft. Gasoline-powered cars also use electric motors with rare earth magnets for critical tasks like steering. The metals also go into chemicals for manufacturing jet engines, lasers, car headlights, and certain spark plugs. And these rare metals are vital ingredients in capacitors, which are electrical components of the computer chip that powers artificial intelligence servers and smartphones. Now, here is as close as we get to the newsiness. Michael Silver, the chairman and chief executive of American Elements, a chemical supplier based in Los Angeles, said his company had been told it would take 45 days before export licenses could be issued and exports of rare earth metals and magnets would resume. Mr. Silver said that his company had increased its inventory last winter in anticipation of a trade war between the United States and China and could meet its existing contract while waiting for the licenses. Daniel Pickard, the chairman of the Critical Minerals Advisory Committee for the Office of the United States Trade Representative and Department of Commerce, expressed concern about the availability of rare earths. Quote, "Does the export control or ban potentially have severe effects in the U.S.? Yes," end quote, he said. So, the delay is being called a suspension. Interestingly, the media seems to be running away with the headlines a little bit, making it sound like an export ban. And maybe it's a distinction without a difference. I mean, export controls in theory, a ban in practice, maybe. And finally, scrolling down a bit, Chinese customs officials are blocking exports of heavy rare earth metals and magnets, not just to the United States, but to any country, including Japan and Germany. So here is some very interesting, what I'd call circumstantial evidence for the case that this isn't simply a retaliation, so to speak, against the United States as a tit for tat, so to speak. The fact that Japan and Germany have been included in the blocking of exports tells me that this is more about a supply issue from China, which I would argue is based out of what is happening in Myanmar, as we're going to see in our next story. Just a couple of paragraphs more here. Most but not all rare earth magnets include heavy rare earths, which are needed to prevent magnets from losing their magnetism at high temperatures or in some electric fields. Some rare earth magnets are made only from light rare earths and are not subject to export restrictions. Customs officials at a few Chinese ports are tolerating exports of magnets if they have only tiny traces of heavy rare earth metals in them, and if the magnets are not going to the United States. Officials at other Chinese ports are taking a more stringent stance, however, demanding that exporters run tests to prove that any batch of magnets does not have heavy rare earth metals in them before the magnets can be loaded on a ship for export. The Chinese export restrictions began taking effect before the Trump administration announced on Friday night that it would exempt many kinds of consumer electronics from China from its latest tariffs. Magnet exports continue to be blocked this weekend, 5 rare earth industry executives said. Now, here's an interesting question. Did Trump provide the exemption in order to try and roll back the rare earth export ban? Like, the tariffs just gave the Chinese an excuse to actually cut the exports under the guise, the, surface level interpretation being, oh, this is a response to the tariffs, but the real meaning, the latent meaning, being a bit of a supply issue because Myanmar, as we're about to see in a Reuters article, is not providing the same amount that they did before. Finally, until 2023, China produced 99% of the world's supply of heavy rare earth metals, with a trickle of production coming out of a refinery in Vietnam, but that refinery has been closed for the past year because of a tax dispute, leaving China with a monopoly. And you just have to, shake your head at the reasons that the Vietnam rare earth processing factory is shutting down, a tax dispute. Now, here's an interesting discrepancy, I would argue. In the New York Times article, just do a search here, Myanmar is not mentioned. And I'll also check Burma, which it is sometimes called. Burma is not mentioned either. Then we return to the article. The world's richest deposits of heavy rare earths lie in a small forested valley on the outskirts of Longnan in the red clay hills of Jiangxi province in south central China. And most of China's refineries and magnet factories are in or near Longnan and Gansu, a town about 80 miles away. Mines in the valley ship ore to refineries in Longnan, which remove contaminants and send the rare earth magnets to factories in Gansu. So interestingly, no mention of Myanmar. Now, here we have another story that came out yesterday. This is Reuters. China March rare earth exports jump as Myanmar supply disruption keeps buyers nervous. And this is by Amy Liv and Lewis Jackson at Reuters. China's exports of rare earths jumped 20% in March from a year earlier as overseas consumers booked more cargoes, fearing prices could rise further due to supply disruptions from the ongoing conflict in major supplier Myanmar. China's exports of the group of 17 minerals stood at 5,666 metric tons last month, according to data from the General Administration of Customs. That compares to 4,710 tons in the same month in 2024 and 3,217 tons in February. So a year ago, March, it was 4,700 tons, and the February that just passed here in 2025 was 3,200 tons. And now, last month in March, they exported 5,600 tons. In the first quarter of 2025, rare earth exports rose 5.1% from a year earlier to 14,177 tons, the customs data showed. Exports in April are likely to fall as shipments of 7 rare earths placed on an export control list last week by Beijing have ground to a halt, raising the risk of shortages overseas as Chinese exporters begin the long, uncertain wait for government licenses. Beijing announced on April 4th it was placing 7 categories of medium and heavy rare earths, samarium, gadolinium, terbium, dysprosium, lutetium, scandium, and yttrium-related items on its export restrictions list with immediate effect. Neha Mukherjee, senior analyst at Benchmark Mineral Intelligence, said China's latest export controls came on top of already volatile heavy rare earth elements supply due to disruptions in Myanmar, putting more than 75% of global mined medium and heavy rare earths at risk and stirring short-term price volatility. Quote, while stockpiles may cover near-term demand, our estimates suggest that they will only suffice until the first half of 2025, and concerns around export delays could drive price spikes, end quote. Mukherjee added, already China's spot price of praseodymium neodymium oxide averaged 443,000 won a ton last month, 1.4% and 26% higher than February and March 2024 respectively. Data from information provider Shanghai Metals Market showed. China's rare earth imports in March fell 42% on the year to 7,756 tons due to problems in Myanmar, despite the resumption of shipments of existing rare earth inventory to China from March 27th. Total imports in the first quarter were 24,679 tons, a decline of 31% year-on-year, the customs data showed. So as you can see here, I think the picture is actually rather clear. This is a matter of China protecting their supply and protecting their own industries more so than a simple retaliation for the sake of retaliation. The tariffs were an excuse for what was already a bit of a supply problem that China is starting to face here. Now, we also have a report from last week in oilprice.com. Myanmar earthquake and tariffs shake rare earth industries. So don't forget, there was a 7.7 magnitude earthquake in Myanmar, which is not helping the situation. As it says here, while the tremors didn't directly damage rare earth mining operations, the global market still took notice. The quake struck near Mandalay, about 425 kilometers from Kachin State, the location of many of Myanmar's rare earth mines. Despite a tragic and still growing death toll, early reports show key mining regions were mostly untouched. Mine operators in the Longchuan area confirmed that roads remain open and ore deliveries are continuing without issue. Now, interestingly, we've been covering the civil war in Myanmar, and what longtime listeners will remember. During the Biden administration, August 2024, the United States had committed to helping the rebels out, and meanwhile, the Chinese government has been meeting with the military junta that is running Myanmar. And so here is the Reuters report from March 27th. Myanmar rebel groups allow exports of rare earth inventories to China, sources say. A Myanmar rebel group that controls one of the world's largest rare earth zones has told miners that it will allow shipments of existing rare earth inventories to China from Thursday, according to 2 sources and a statement reviewed by Reuters. Rare earth mining in Myanmar is concentrated in Kachin State around the towns of Panwa and Chipway, which have been controlled by the Kachin Independence Army, or KIA, since last October. Since the group took over, China's imports of rare earth oxides and compounds from Myanmar have fallen sharply, Chinese customs data show, driving up prices. The KIA will allow stockpiles of rare earths to be exported from Thursday and will levy a tax of $4,800 a ton, it said in a statement sent to miners in the region. The statement was not dated, but the sources who have knowledge of the matter said it was sent on Wednesday. They sought anonymity as they were not authorized to speak with media. The KIA did not respond to a Reuters request for comment. Prices for terbium oxide, whose supply is concentrated in Kachin, jumped 21.9% to 6,550 won per kilogram between late September and March 24th as imports from Myanmar dried up. So all to say, the background is pretty helpful, I would argue, in understanding the dynamics of this story. And a few more headlines here. Europe seen struggling to compete with China on rare earths. This is Reuters via mining.com. Europe will probably be able to produce only a small portion of rare earths it needs for electric vehicles and wind turbines by 2030. Mainly due to cheap competition from dominant producer China, a consultant said on Tuesday. Europe and the U.S. have been scrambling in recent years to boost domestic production and processing of rare earths to cut dependence on China. Quote, today there's a cost gap of 20 to 40% between a value chain in China and a potential value chain in Europe, end quote, said Laurent Migom of consultancy Bain. He continues, quote, and this is why we do not expect sufficient permanent magnet making in Europe in the current environment, end quote. Migom told an event where chemical group Solvay launched an expansion of its rare earth processing in La Rochelle, France. An industry source at the event told Reuters in some cases the gap was even wider, with Chinese products 60 to 70% cheaper. I mean, I think actually the prices may actually start to level out here pretty quickly. And there is a related story in mining.com as well. Solvay launches rare earth processing expansion amid China restrictions. This is Reuters via mining.com. Chemicals group Solvay launched an expansion on Tuesday to regain its previous strength in processing rare earths, hoping to attract customers after China imposed new barriers. And here's CEO Philippe Quérin, who told Reuters at the launch of the expansion of the 77-year-old plant in La Rochelle, France, quote, what's happening is an incentive to develop those regional value chains. Now let's see if people really want to develop this value chain, because if we want to invest further, we will need some comfort from the customers, end quote. And another interesting quote, this is Anne Nuitens, president of Solvay's division that produces rare earth products. Quote, the issue is not capacity. We can adapt to what is needed. The car manufacturers, the wind turbine manufacturers, those are the stakeholders that will make this happen or not, end quote. I mean, this seems like it is a financial issue. I mean, it's reminiscent of Vietnam. I just don't understand what's going on here from a governmental perspective where the entire world is facing a potential shortage, basically running on stockpiles of certain rare earths here. And these companies that can provide the rare earths are still wondering if there's going to be any money for them, or that they're dealing with a tax dispute in Vietnam and shutting down. So, very interesting. In another headline, this is the Financial Times, Australian miners benefit from new Chinese restrictions on rare earth exports. So truly a global story here. And the FT refers to Lynas Rare Earths, Northern Minerals, and Arufura Rare Earths, whose stocks are rising on investor bets that they could be long-term suppliers of the materials Western buyers need to deliver modern energy and defense systems. So Australian rare earth stocks catch a bid. So here we are, the global supply chains hinging on these rare earth minerals right now. It's going to be interesting to see what happens should they run out. And so a wonderful show ahead of us. We have Frik Els, editor-at-large at mining.com, who visited First Quantum Minerals' Cobre Panama mine, one of the biggest mining stories of 2024, starting in late 2023, as we discussed with Frik. And he wrote a site visit. One of the strangest chapters in copper mining is drawing to a close. And he describes these surreal landscapes of this mine that is frozen in time. Also, all of the different factors that are weighing in on this major copper operation in Panama. So a fascinating interview with mining.com's Frik Els on this week's episode. And also coming up, we have Olympio Metals Managing Director Sean Delaney, who discusses the company's projects in Ontario and Quebec. So lots to look forward to. If you want to find us online, you can find us at northernminer.com. You can find us on X at Northern Miner. You can find us on Instagram at The Northern Miner, and on Facebook, LinkedIn, and YouTube, where we also host these podcasts and wherever podcasts are available, including Spotify, SoundCloud, and Apple Podcasts. And with that, let's turn to Sean Delaney, Managing Director at Olympio Metals, for this week's Spotlight. Joining us today, I'm very pleased to welcome to the Northern Miner Podcast for this week's Spotlight, Sean Delaney, Managing Director at Olympio Metals. Sean, welcome to the show.
Thank you very much, Adrian. Thanks for having me on the podcast.
It's a pleasure to have you, Sean. It sounds like an interesting story, an Australian company with properties in Canada. For those that are unfamiliar with Olympio Metals, could you give us a little bit of background on the company and what you guys are up to?
A listed company in Australia, Olympio Metals Limited, OLY is the code. We listed it 2.5 years ago. We initially went to Quebec on a lithium exploration journey, if you like. We had a major shareholder. There was a lithium royalty corp, but obviously lithium exploration is pretty tough, but we still like Quebec just because it's a mining jurisdiction. And, I just think the geology is sort of amazing there, especially through the Cadillac Break. So at the end of last year, we acquired the Dufay copper gold project from a couple of prospectors, probably relatively well-known prospectors out of Val-d'Or. As you know, Jean Audet, whose father was a very famous prospector, I'm led to believe, Jean Robert, who's an older gentleman now, but apparently one of the best line cutters ever to cut lines through there. He did it for 50 years. So we acquired that project just out of very close, or pretty much on the Cadillac Break, just to the west of Rouyn-Noranda. There's obviously, copper smelter there at Rouyn-Noranda. Location's amazing. The main road goes through it. So we love the area, prospective south of the Break. And then just in the last sort of month or so, we acquired another project from Bullion Gold Resources called the Bousquet project, which is between Rouyn-Noranda and Val-d'Or. Fabulous geology, close to IM Gold's Westwood mine and mill there, surrounded by Agnico Eagle, IM Gold, and Hecla on the other side. So right on the Break. Again, we think the geology is amazing there. So that's pretty much our story in summary, I guess. We're just trying to consolidate our position on the Cadillac Break. And we're just trying to do some good exploration work there.
Okay, excellent. It sounds exciting. And gold, of course, doing wonderful right now, and copper also looking quite positive. So as far as the Dufay Copper Gold Project, is that primarily a copper project? Could you give us a little bit more information really about the nature of the project and what's going on there? Have you started drilling, or where you are in the project's journey?
It's a copper gold project. Dave Bevington's our geo. He went out there last year and went on the ground. He reckons there was chalcopyrite and every sort of rock he broke open there. So, there's copper sort of all throughout there. And one little prospect on the Dufay project called Chevrier that was briefly mined in the 20s, some high-grade copper that was mined from there. But also there's gold potential there as well, a copper gold potential, porphyry style mineralization, very similar to Focus Mining, which have got like 1.4 million ounces of gold resource, and they're only 5 Ks to the north. So we identified some really interesting anomalies, IP anomaly there from some of the historical work that was done. And then we ran our own ground EM anomaly on that just in December, sort of January, just to sort of, firm up our plans for drilling there. So, look, that's the sort of, copper gold sort of porphyry target. We call it Desiree, which is sort of the name of the locality there, if you like. So it's a really sort of super interesting project, I guess, just because it's got so much sort of native copper on the surface and also this gold potential. So we got to work sort of straight away on the planning of our exploration there. And we're actually drilling some diamond holes into these targets just right as we speak. So the Forage Val-d'Or are doing the work there. Those Canadian drillers, they're hardy boys. They can work in the sort of very cold temperatures through winter there. So it's totally different from how we operate in Western Australia, that's for sure. But those guys are powering through the drilling there. So we're hoping to see something interesting in the core, there over sort of and get some assays from those drill holes over the next few weeks. So we're making nice progress there, considering we only picked up the project at the end of last year. So it's going good.
Okay, excellent. And I feel like I know exactly what you're talking about. Having grown up in Saskatchewan, there is a hardiness and there is a toughness of a lot of the farm boys that grew up in Saskatchewan. I know them well.
Absolutely.
So great. Okay. So now is this project, the Dufay project, is that in Quebec?
That's in Quebec, it runs almost right up to the Ontario border, It's pretty much, almost goes to the border, but in Quebec, on the Cadillac Break sort of section in Quebec,
Okay, great. And the Bousquet project, I assume, is in Quebec. Is that correct?
Correct, that's a bit bit further east between Rouyn-Noranda and Val-d'Or. Yeah, so the highway, if you're driving from Val-d'Or to Rouyn-Noranda, the highway doesn't quite go through the project, but it's just off it to the south. So it's the access and the infrastructure is I guess one of the things that really attract us to that area as well. You've got mining port towns in Val-d'Or and Rouyn-Noranda. You've got all the services nearby. Access is easy, and yeah, we think there's just still a lot of upside to exploration there. When we look at sort of comparisons between, say, the Golden Mile in Western Australia, versus Cadillac Break, you're both sort of prolific gold producing areas, but yeah, we still think there's a lot of exploration upside on the Cadillac Break and just some amazing resources and mines through that area.
Okay, excellent. So as far as the roadmap then, how do you see things, playing out, let's say, in the next 6 months to 2 years or so? Where is this all going, Sean?
Yeah, well, Biscay, as I said, we only just acquired that just literally in the last couple of weeks. So we're really just sort of digging into the data. That's a really interesting sort of pure gold project there. That's had some drilling done over time. It's got, mineralization there basically in the structures. Some really nice high grade, results, from sort of the drilling work that's been done. So 9 meters, that's sort of 17 grams per ton in sort of one of the holes that was completed in 21 there. So we're basically just working through the data. We're just sort of modeling that up. We're starting the approval process for our drilling programs there. So, we've got all year round access there. So once we get those approvals in place and the snow clears out there, we'll get to work, get on the ground and start putting some holes into what we think is some super exciting gold targets on that Biscay project. The Dufay project, as I say, we're drilling there now. Obviously, the results of that drilling will sort of determine in a large way what the next steps will be for exploration at Dufay. But look, we can't find anything without sort of putting some holes in the ground. So really, we don't want to just sort of sit around. We sort of consolidated our position on the Cadillac Break there with this sort of second acquisition. We want to do some serious exploration, do some drilling and see what we can discover. And of course, we're always looking out for the next big thing, whatever format that is. But yeah, we certainly love that area. So we're happy to be there and planning to do some sort of significant exploration over this year and then sort of flowing into winter at the end of the year and into next year.
Okay, excellent. So as we wrap up here, Sean, what is it that you want investors to know about Olympio Metals? What is your message to investors?
Olympio Metals is a very tight capital structure, if you like. There's only 87 million shares on issue. Vision Lithium out of Quebec are major shareholders holding 10 million shares. So, we've got a very small market cap, sort of $4 or $5 million sort of market cap. So, yeah, we just think there's really sort of significant upside, on any exploration success in Olympio right now. So, yeah, look, we're always loving to see new shareholders on the register. We're hoping that, we can expand our shareholder base through Canada, given that we're in the area. So yeah, look, tight capital structure, which basically gives you some upside. Yeah, look, we're confident we can raise the funds to do exploration there. So we don't think that will hold us back. So yeah, just looking for people to have a look at Olympio Metals and love to see new shareholders on the register, and obviously, always feel free to get in touch if there's something, an advanced sort of gold project in that region that you think we might be interested in.
Sean Delaney, Managing Director of Olympio Metals, thank you for joining us and sharing what you're working on.
Thank you, Adrian.
And thank you once again to Olympio Metals for sponsoring this week's episode of the Northern Miner Podcast. If you want to learn more, visit olympiometals.com.au. Turning to the website, Goldman Sachs upgrades gold forecast to $3,700. Of course, we are at a new record in gold. Another massive story we are closely covering here. And gold, just for your information, the futures here, $3,245.90 per ounce. So let's turn back to the story. So another, 15%, and we're going to be at Goldman Sachs' target. This is by a staff writer at Northern Miner. Goldman Sachs has once again lifted its year-end price target for gold, this time to $3,700 an ounce, amid uncertainty surrounding the state of the global economy. In a note issued late Friday, the bank upgraded its 2025 price target following gold's impressive recovery from the market sell-off triggered by the April 2nd tariff announcements, which drove even the safe haven metal down by as much as 5% to cover losses in other asset classes. This represents the third time that Goldman upped its forecast for gold this year, and the most aggressive, plus 12% of all. So very interesting, and we also have a story from Reuters. Chinese gold ETF's April inflows surpassed first quarter total. World Gold Council says, this is Reuters, April 14th. Investment flows into Chinese physically backed gold exchange-traded funds so far this month have exceeded those for the whole of the first quarter and overtaken inflows registered by U.S.-listed funds, World Gold Council data showed. And so quite interesting, one wonders if money that was previously going into U.S. treasuries is now being funneled into gold. Gold ETFs in China increased by 29 metric tons in the first 11 days of April. John Reed, senior market strategist at the World Gold Council, said on social media on Monday. That compares with the inflows of 23.5 tons registered in January to March. So just to repeat that, gold ETFs in China increased by 29 metric tons in the first 11 days of April, which is more than the entire first 3 months of the year, which added up to 23.5 tons. So 29 in the first 11 days of April, 23.5 in the first 3 months. That is pretty wild. So one can't help but relate this to tariffs. And here is a quote from John Reed, senior market strategist at the World Gold Council. Quote, "If the first quarter of the year was dominated by U.S. tariff-related gold flows and Western ETF buying, the second quarter may have a very different theme, that of a surge in investor interest in gold from China." End quote. So fascinating developments there. Continuing on, an update on deep-sea mining, Trump planning to stockpile deep-sea minerals to counter China. According to the Financial Times, this is by a staff writer at mining.com. U.S. President Donald Trump is in the process of drafting an executive order that would enable America to stockpile the wealth of critical minerals found on the Pacific Ocean seabed, the Financial Times reported on Saturday. The move is aimed at countering Chinese global dominance in the critical minerals sector by tapping into a largely unexploited part of the Earth. The polymetallic nodules formed on the seafloor are said to contain rich amounts of nickel, cobalt, copper, and manganese used in batteries, as well as traces of rare earth minerals, a group of 17 elements required to build high-tech applications. So we're kind of back to processing versus mining. And I would argue the real bottleneck here is metals processing. The mining is an issue. We do need ore, but the stranglehold that China has is because of its processing. And just a little bit more, the executive order, according to FT, would allow the U.S. government to build a, quote, strategic reserve, end quote, of these critical minerals, like it had done with gold and oil. The plan is to, quote, create large quantities ready and available on U.S. territory to be used in the future, end quote, in case of conflict with China that might constrain imports of metals and rare earths, the FD sources said. So, interesting development there. Turning to Canada, where they are in full election mode, Prime Minister Mark Carney vows to speed permits, make Canada energy superpower. Long overdue. From a resource perspective, there's no reason why Canada, when you think of the energy and the metals, Canada has been punching far below its weight class, and it's kind of music to the ears of this host, frankly, to hear someone talking about Canada being, say, an energy superpower. This is Bloomberg News via mining.com. Prime Minister Mark Carney pledged to make Canada the world's, quote, leading energy superpower, end quote, through a plan that includes establishing a single office that would decide on major projects within 2 years. The Liberal Party leader said at a campaign stop in Calgary that his government would create a major federal project office with a, quote, one project, one review mandate. The aim would be to eliminate duplication of federal and provincial environmental assessments, speeding up reviews. So the message is getting out there. It is being heard. Quote, we are going to aggressively develop projects that are in the national interest in order to protect Canada's energy security, diversify our trade, and enhance our long-term competitiveness, all while reducing emissions, end quote, Carney said in a statement. Quote, we can lead the energy transition while ensuring affordable energy at home and building the strongest economy in the G7, end quote. It's nice to hear, growing up, in Canada, it's nice to hear the ambition to do these things. It's not often you really grew up hearing this kind of vision, frankly, for the country. Canada ships some 4 million barrels of crude a day. So the election is April 28th, so a couple of weeks away here. And also, Conservative leader Pierre Poilievre has also pledged to work on timelines for mining projects. So a major issue, this election in Canada. Continuing on, Uzbekistan and U.S. companies ink mineral deals. This is by a staff writer at Northern Miner. The United States has stepped up its global pursuit of strategic minerals with the signing of a deal promoting American mining investment in Uzbekistan. The announcement comes after an Uzbek delegation was in Washington this week to meet with U.S. business executives, according to the Central Asian country, although it didn't list interested companies or investment amounts. The deal follows a meeting Wednesday between U.S. Secretary of State Mark Rubio and his Uzbek counterpart, Bakhtiyor Sadov. Both nations signed a memorandum of understanding in September to enhance cooperation on critical minerals. Quote, these agreements encompass investments in the exploration and extraction of minerals, including the construction of grinding machinery and training for Uzbek specialists, end quote, the government based in the capital Tashkent said in a statement. Quote, there's great potential ahead for investments between our countries and cooperation in the critical minerals and other sectors, end quote, Rubio wrote on his X account following the meeting. So again, I mean, it's hard to imagine the mining sector really becoming any more central to the discussion than it really is right now. All it can do is stay there, and it's going to be interesting to see how long it does. Continuing on, China's copper smelters rue Beijing's curbs on U.S. raw materials. It's Bloomberg News via mining.com. Beijing's response to punitive U.S. tariffs could create yet another headache for Chinese copper smelters already grappling with a shortage of raw materials and plummeting profits. China's swift retaliation in matching Washington's blanket 34% levies is likely to bring U.S. shipments of copper scrap to a halt from next month. The country last year accounted for about 1/5 of China's overseas purchases, which have been used as a replacement feedstock for the copper ore that's in short supply. So almost a reverse of the rare earth situation. The copper scraps coming out of the United States could cause a problem for Chinese copper smelters. And continuing on, China announces quartz discovery vital to chips to rival U.S. mine. This is Bloomberg News via mining.com. So, of course, we were discussing quartz just last episode. China announced it has discovered new deposits of high-purity quartz, a mineral with small but crucial role in the production of semiconductors and solar panels. High-purity quartz is one of the few critical minerals dominated by the U.S., with the bulk of global production located around just one town in North Carolina. The Chinese discoveries made several years ago were announced Thursday by the Ministry of Natural Resources. So perhaps China is sensing a retaliation by the U.S. with quartz and are trying to get ahead of it by saying, hey, no problem. We have a bunch of quartz over here, so if you ban it, it's not going to make a difference, so maybe you don't ban it. To me, it sounds like they may have a bit of a vulnerability here. The timing of the announcement highlights Beijing's desire to minimize leverage points the U.S. may have in the fast-escalating trade war between the world's two biggest economies. State-backed Xinhua news service hailed the discovery for its potential to secure supply lines for Chinese high-tech industry. So, I mean, if the U.S. wanted to respond to the rare earths, I'd probably just cut the quartz off immediately. Continuing on, Iran's expanded uranium mining hints at much bigger reserves. This is Bloomberg News via mining.com. So all the major geopolitical stories here seem to have critical minerals as a major structural component of their narratives. Iran is expanding uranium production after indicating that it has significantly higher reserves of the metal than previously estimated, according to the latest nuclear watchdog data. The new figures, published Tuesday in the biennial Red Book, a survey of the uranium industry, may trigger concern over the direction of Iran's nuclear program. The Islamic Republic has been digging at more than half a dozen new uranium mines since 2022, yet its resources are considered uneconomic and well below what is needed to fuel a nuclear reactor. Tehran's government, quote, indicates that Iran's uranium reserves are much larger than previously estimated, and, quote, wrote the authors of the report, who work at the Paris-based Nuclear Energy Agency and Vienna-based International Atomic Energy Agency. The country may almost quadruple ore production to 71 tons this year, according to the report. And just a few headlines here. Ma'aden, out of Saudi Arabia, weighs foreign partner for minerals processing pact. This is Reuters via mining.com. Saudi Arabia's flagship mining company, Ma'aden, is considering choosing at least one of 4 foreign firms to form a rare earths processing partnership, 3 sources with knowledge of the matter said, as the kingdom bids to become a global critical minerals hub. Ma'aden is weighing a partnership with U.S.-based MP Materials, China's Shanghai Resources, Australia's Lynas Rare Earths, or Canada's Neo Performance Materials, the sources said. Ma'aden plans to choose at least one partner by the end of June to help develop plans for a rare earths processing facility and eventually a magnet facility inside the kingdom, according to the sources who were not authorized to discuss the deliberations publicly. Kind of a high-risk business to divulge information like that, one would think. Also, another interesting headline, Fortuna Mining exits Burkina Faso for $130 million. This is by a staff writer at mining.com. Fortuna Mining agreed to sell its Burkina Faso operations to Mauritius-based Soleil Resources International for about $130 million in cash. The sale represents, quote, a prudent exit that optimizes value, and, quote, given the increasingly challenging business climate in Burkina Faso, Fortuna CEO Jorge Ganoza said in a statement Friday. The Yaramoko mine, the company's main asset in the country, has about 1 year remaining on its reserves. It would be interesting to get Jorge Ganoza back on the show to discuss this. So those are your news stories. Now, let's take a look at metal prices. And turning to metal prices, let's take a quick look at the bond market. For context, the U.S. 10-year bond is yielding 4.39%. That is up 0.25% on the week after a very volatile week. The UK 10-year gilt is yielding 4.64%. That is down 0.01% on the week. Italy's 10-year bond is yielding 3.68%. That is down 0.19% on the week. The German 10-year Bund is yielding 2.51%. That is down 0.15% on the week. And the Japanese 10-year bond is yielding 1.37%. That is 0.15% higher on the week. So bond yield significantly higher on the week in the U.S., up 0.25%. And also the Japanese 10-year bond higher, whereas European bonds are heading in the opposite direction, and the UK 10-year gilt just edging more or less sideways. And this would match with reports of people edging towards the European bond market over the U.S. bond market on the tariffs. Turning to precious metals, gold is trading at $3,237.60 per ounce. That is $222 higher on the week. Silver is trading at $32.35 per ounce. That is $2.25 higher than last week. Platinum is trading at $949.70 per ounce. That is $51 higher than last week, and palladium is trading at $940.50 per ounce. That is $63 higher on the week. So precious metals decidedly higher. Gold at a new record. Turning to industrial metals, copper is recovering nicely at $4.63 per pound. That is 37 cents higher than last week. Iron ore has fallen below $100 to $99.95 per metric ton. That is $3 lower than last week. Aluminum is unchanged at $1.08 per pound. Lead is trading at 87 cents per pound. That is 2 cents higher on the week. Nickel is also higher at $6.95 per pound. That is 37 cents higher than last week after the big fall, but still below $7. Tin is trading at $14.16 per pound. That is $1.89 lower than last week, so big drop in tin. Cobalt is trading at $15.29 per pound. That is 10 cents lower than last week. Lithium continues to fall at $9.79 per kilogram. That is 14 cents lower than last week. Uranium is trading at $64.40 per pound. That is 50 cents lower than last week, so edging slightly lower. And zinc is unchanged at $1.20 per pound. Zooming out, precious metals doing fabulous, while industrial metals, just a mixed bag everywhere, perhaps reflecting policy uncertainty in the markets, and those are your metal prices. Coming up, I'm very pleased to welcome Frik Els, editor-at-large at mining.com, to this week's podcast for an absolutely fascinating discussion on his site visit to Panama to visit and see firsthand First Quantum Minerals' Cobre Panama mine. A site visit that you can find on both mining.com and the Northern Miner. As it's called, one of the strangest chapters in copper mining is drawing to a close. So a wonderful interview with Frik Els on this week's podcast. I hope you enjoy it, and I will see you on the other side. Joining us today, I'm very pleased to welcome back to the Northern Miner podcast, Frik Els, editor-at-large at mining.com. Frik, welcome to the show.
Thank you, Adrian. Good to be here.
Well, it's really great to have you back, Frik. It is overdue, and it's pretty amazing what you have been up to. Apparently, so I've heard, you did a site visit at First Quantum's Cobre Panama mine. Tell us, is that the case, and how did this come to be?
I've been obviously following the story quite closely. So when First Quantum put out an invitation for journalists to go and visit and actually go to the mine itself, it's not just a debriefing from the comfort of a Panama City hotel. We were actually on the ground. I had to jump at the chance. So there was a group of us that were taken through. It's part of First Quantum's bigger push to let people know what's going on there. What does the mine actually do? How it goes about its business, and what's going on the ground.
Yeah, it's absolutely fascinating that First Quantum, in a sense, initiated it. Now, for those who are unfamiliar with the story, I think most of our listeners are, but just for those who are not, could you give us a very brief rundown of what's happened at First Quantum's Cobre Panama mine? Of course, one of the big stories of 2024. I guess it's been longer, maybe even of 2023. Maybe you can help us out with that.
Right. So this all came to a head at the end of 2023. There was widespread unhappiness with the government. They were going into an election cycle. The country is in trouble economically. They are going through adjustments post-COVID. There's also been an impact on their banking sector, of course. The canal, which is still kind of the lifeblood of the country, is in trouble because of droughts. So the throughput is not as great as it could be. So all of that came to a head. And I think what happened was the mine became the lightning rod for all the unhappiness that the Panamanian people have with their politicians. So the protests started about the deal that was signed by the previous regime with First Quantum, setting royalties, etc. And the Panamanians were saying, this is a corrupt deal. We want to get rid of the politician. We're willing to shut down this mine to break this whole thing up. And that's what happened. So there was weeks, maybe even a couple of months of protests all over the country, and then it kind of concentrated on the mine. The port was blocked. The road into the mine was blocked. There was some violence associated with that. And then eventually what happened was the agreement fell through, and the Constitutional Court said the agreement signed by the previous government with First Quantum or with Cobre Panama is unconstitutional, and with one signature, mine was forced to close. And at the same time, they basically had a de facto ban on all mining. I mean, Cobre Panama is really the only game in town, but no one else can apply for new licenses or exploration licenses even. So as it stands now, since November 2023, mining is basically banned within Panama.
And this was no small mine, right? Like, this is a significant copper mine, particularly, as you're saying, in Panama, but also in the copper world. This is no small matter.
The way the copper industry is operating now, evolving, is that very few high-grade economic deposits exist. So if you can find them, you need to build them. Just within the broader context of the copper industry, the green energy transition, the demand on copper, longer term demand is going to be there. The copper mining is becoming kind of a central piece, not just of the mining industry in general, but it lies at the nexus of the energy transition, of all of those things. It's in everything we do. So yeah, copper is definitely coming into the broader consciousness of the public and of governments. I mean, the US has copper as a critical mineral, so do many other countries. And it's also part of the bigger issue with decoupling with China. China refines almost 60% of all copper in the world. So yeah, copper is the geopolitical issue, is coming to the forefront and will stay at the forefront for a while. So within the bigger context, having a mine like Cobre Panama coming online is kind of essential to achieve all of these goals that governments have. And they just become much more scarcer. So it's a big mine. They were actually, in the final stages of expansion, or recently finished their expansion to become 100 million ton per year mill throughput. I mean, that is just, I don't even have to put it into context. 100 million tons is a lot of tons. It's a lot of ore.
Exactly.
Yeah.
Yeah.
And it's, I need to check, but I think it's something like a 37-year mine life. So it's a generational kind of asset. Within the Panamanian context, I mean, I mentioned it there in the piece that if the construction industry in the US is 4% of the overall economy of GDP in the US, all construction, So that's 4% of US economy. The mine was equivalent to 5% of the Panamanian economy. So all of a sudden, you rip 5% of economic activity out of your country, it'll be the same as, stopping construction in the US. It was also 75% of export earnings for the country. So yeah, the way I describe it, it's a big hole in the middle of Panama. It's a big hole in the middle of the global copper industry. The fact that we got to this point, is like I say, I call it one of the strangest chapters in copper mining, and I guess that would be within the Panamanian context. It's just central and huge.
Yeah, the stakes are high on
Yeah,
both, I guess, a national and
exactly.
even on an international level, to your point. I mean, it has geopolitical implications. I mean, it's quite something. Now, to your site visit then. So
Yeah.
you get invited. I mean, how did this take place? So they fly you into, is it Panama City? Like, could you take us through the journey?
I fly myself in. I mentioned also in the article that I'm based on Vancouver Island. So getting to Panama City is not necessarily a great trip to have. So yeah, we make our way there, meet up with lots of other journalists, local and also from overseas. We get on a bunch of helicopters and we do a tour of the site, walking, driving around, visit all the different areas of the mine, get kind of a debrief from the people who are actually still working on site. I mean, they're spending around $15 million per month just to keep the operation, preserve the operation, keep it safe, maintain stuff as much as possible for when there is a restart. There used to be like 4,500 people in the on-site housing, and, only less than a third is now actually working on the mine site. So it was definitely a different experience walking in an operation of that size and seeing so little activity. And it's quiet. Now, open pit mine should never be quiet. It should always be something deafening out there. But this was different.
It sounds like a pretty large operation. I want to call it gigantic, but if
Yeah.
you're spending $15 million a month just to
Mhm.
keep this thing from basically getting out of shape, it's pretty significant. And it just kind of goes to show the scale of this situation. Now, was there a kind of, I don't know, a tone or a messaging that they were trying to push to a certain degree, or that they were trying to relay to the reporters? In a sense, what do you think they wanted you to see? Like, was it simply, hey, look, this is what's going on, and go home and write an article on what you saw? Or did you get the sense that there was kind of messaging at work?
I think our visit, the media visit, was just part of their bigger program. There's definitely a huge outreach within Panama. They take some of the local communities around there, people from all over Panama, from, just normal people. They want to show what this mine does. On the face of it, if you go there and you say, fine, you have suspended this asset within your country that is contributing $1.8 billion to state coffers through salaries and social security, never mind the direct payments from royalties to the government. I mean, why would you rip this out of your economy? So my first impression was, just how did this come about? Why would anyone let this happen to your country? Because I couldn't kind of bring the two things together. So I think their push to bring the story out of the mine and what it does for Panama, that got lost before and during and after the protests. People just hear that, oh, they're, poisoning the jungle with cyanide. And they want to get rid of this politician. The politician signed the agreement that was written into law with the mine. So we're happy to throw out the baby with the bathwater. We just want to stop this thing. So I think that was the basic thing that I wanted to understand. And I think, which is what First Quantum want to let the people of Panama and the broader industry and politicians and other governments understand, is what are we really doing there? Because there is so much out there, so much information that was thrown around. I mean, it became a cause for lots of different stakeholders, this mine. So I guess it was setting the record straight. So that's why I was keen to go and have a look, because I wanted to figure out, for want of a better phrase, what the hell is going on.
Yeah, and no better way than to show up in person and to see for
Yeah.
yourself rather than, reading words on a screen, as
Yeah.
we often do. So what is your understanding then? So they shut down the mine with all of the protests, and then I believe there was a referendum, right? And then the Supreme Court somehow declared it illegal. And I don't want to rehash the history too much, but what have they been doing since the closure of the mine? It seems like it's been an educational campaign. Maybe they weren't being that impressive before, the fact that it did shut down and there was all this kind of negative information. But it seems like they've actually done surprisingly well, one might say, since. So what have they been doing?
I think there was a realization that communication with, sort of the broader public wasn't what it should have been. Or maybe that's a lesson to other copper operations operating in these kinds of environments. Never stop talking about what you're doing, because people don't necessarily understand what mining does and why we have it. So free and open communication, and not just with the government or people in power, especially in a situation like that, where it's such a central piece of the economy of the country. You should be speaking to everyone. This kind of lack of understanding of what mining does, and especially what copper mining does and what the role it plays, it's not out there. That is true far outside Panama. People just don't appreciate why we need to have these mines. So I think that was just this is what we bring to the table, and do not punish us and punish the people who used to work there and all the secondary effects of having the mine there. Do not punish us for your dissatisfaction with politicians.
And so it seems to me, just from what I've read, as well as your article that you wrote in mining.com on this site visit, I mean, a unique site visit indeed. My impression is that the locals are becoming happier with the project than they were before, that in a sense, the education campaign, the PR outreach, whatever they've been doing seems to be working, to the point where now the government, there's definitely a warming up between the government and First Quantum, and the notion of this project reopening doesn't seem like a crazy thought. So was that your impression?
Yes, I mean, it's also, the passage of time. I mean, there is now a new government with a fairly strong mandate. There's also more than a year, it's now 18 months, basically, that has passed, where the effects of the closure is being felt. They have some big deficit problems. The Social Security, there was just new legislation pushed through by the Molino, which is the current president, because if they don't do those kinds of reforms, the country's deficits are just going to grow. Their sovereign debt has been downgraded by at least one credit rating agency to junk status. So yes, there is a better awareness among the public that something needs to change here. And now that we see what's actually going on, maybe we won't believe Leonardo DiCaprio anymore that says, we need to close this thing down. So there's that. There is definitely more of a sense of urgency and realization from the government that we need to, get this thing back on track, because the impact is just too great on our finances, and unemployment is rising, etc. So I think there's an understanding on both sides. Something needs to be done. I think there is kind of a bit of a road ahead still for both parties, because the negativity towards the mine was obviously huge during the elections and the protests. So the politicians also have to be careful that they not be seen to, have another stitch up with this company, and the populace is left out of the deal once again. So yeah, I think there's going to be some PR from the government side as well to get the people back on side with this mine. I mean, it was a $10 billion investment to get this mine to start operating. So, I mean, in the context of Panama, these are huge numbers. In the context of any country, $10 billion foreign direct investment is, makes a difference.
It recalls Mark Bristow and these, almost renegotiated deals, and not in Mali, but otherwhere, say like Papua New Guinea. And it seems to me that there almost is a need to take a page out of Mark Bristow's playbook, so to speak, and do a kind of renegotiation, give the country a little bit more in order to kind of push this through. But I'm curious, Tell us some highlights about the trip. I mean, we've been speaking in generalities here. We heard a little bit about the helicopters, seeing the mine. Like, what were some of the highlights of your experience, seeing things with your own eyes?
Yes, it's again, you're standing next to a giant ball mill, one of six next to each other. I mean, they should be crushing rock at that point, and you can peer inside now, being up close with, these giant machines. You have row upon row of shovels and trucks and dozers standing there baking in the sun. That was strange to see. Most of the day taken up by this tour, we also went into the surrounding villages and spoke to the locals. We got to see every aspect. So one of that did leave quite an impression was like the main office building. It was new. You could see it's a nice modern office building. And then you walk in there, and there's 2 floors of cubicles and workstations and machines, and there's no one there. There's boardrooms and meeting rooms standing empty. That just brought home, you hear, oh, we're putting so and so mine on care and maintenance, and you think, okay, fine, it's part of running a business or running a mine. You need to do maintenance, whatever, and you'll reopen when you have to. But if you look at there and there's empty office buildings where there should be people working, then it kind of hits home. So yes, just looking down into the pit, and there is a lonely shovel just sitting there, nothing to do. Trucks lined up, which should be hauling ore, and nothing. And it's literally, it's stopped. There's still stockpiles ready to go into the processing phase of things, and it's just being stacked there. I mean, for me, the strangest thing almost was the concentrate ready to be shipped right at the port. They built the port too, they built the power station, and there is 120,000 worth of copper concentrate. And it's also sitting there. I don't think it's moved. They've authorized to move it now, but I think it's probably might still be at portside at this point. So that is basically cash, depending on which day of the week we are, because the copper price is going up and down all the time. But it's worth at least around $300 million that wasn't shipped either. So it was definitely a learning experience. And you just, from a personal point of view, I have done a few mine tours, but I mean, you kind of stay away from the bowels of it. But here you could kind of get up close. I wasn't about to dive into the tailings pond. It was so hot, at one point I thought maybe that's a good way of cooling off.
Well, I'm glad that someone's getting some warm weather at that time of year. What's kind of interesting about your description, I mean, it sounds quite surreal, and you kind of alluded to that in the title of the article of the site visit. I mean, it recalls almost like a J.G. Ballard novel of these kind of almost empty swimming pools and, a place, again, where time is standing still. It was kind of surreal, wasn't it?
Yeah, no, at one point, the area, it's just like a huge gravel field, basically, where they parked all the machinery, all the mobile machinery. Somebody said, I don't know who, can't remember who said it, or maybe I said it, that, oh man, this is perfect for the next Blade Runner movie or something, Perfect setting. I mean, it's a huge complex. And then somebody else said, oh, well, I've got a better idea. Let's make it a huge paintball circuit, If all else fails, if the mine never reopens, they'll be able to turn it in some kind of theme park or adventure playground. But yeah, that is the kind of things that strike you there.
That recalls Rob McEwen wanting to build the resort above the mine.
Yes.
I guess that's another option. Maybe that would be the bigger moneymaker at the end of the day. You never know. Okay,
Yeah.
awesome. So as we start to wrap up here, Frik, so where are we? What are the next steps as far as you understand? Did you talk to any government people? Where is this all going?
Molino said that he wants to finish the changes to Social Security first before he moves on to the mine. So that is now gone through, that's now been approved by Congress. It's signed into law. So I do think the next thing that the government will move on to is moving forward with this. I think the basics are in place for this to start happening. There is also, I think, a greater sense of urgency that we need to do this because, we need that money flowing in. On the other side, First Quantum, they've dropped their arbitration, or most of it. And they've always said, we don't want to go into international arbitration. We want to settle this one-on-one, so that they're closer on that as well. Franco-Nevada put up 1.3 billion in exchange for a precious metal stream. They also have arbitration, but that is set for October next year. So they've also said, obviously, they would rather negotiate an end to this. So I think the basic structure and framework is now in place for people to, start having more high-level talks, which hasn't happened up to now. So, I think we're at least, I don't want to make predictions because if nothing else, Panamanian politics is not easy to predict. But I would say we're definitely at the beginning of the end here. And I think people realize it has to go somewhere now. The status quo can't really, stay in place. So, yeah, I think we'll be seeing that. It's one thing that the negotiations start, and I think they'll probably be fairly tough for both sides, probably. But even when you get the green light, then you have to get this massive operation back into gear. Now, the number that we were given is kind of 6 months minimum, because you have to rehire all these people. All the contracts need to be renewed. All the stuff needs to be shipped in to restart. You have to rehire people. So even 6 months sounds optimistic. So let's say there's an announcement tomorrow, high-level talks in Panama to get this thing going. Green light a couple of months later. So I don't know. We're probably looking at early 2026, if all goes well, to be back, fully in business. I think lessons were learned on both sides of you don't sell a mine just based on production or grade or size of deposit or anything like that. The social license, mining industry has been talking about that for how long? For decades. And here you have just another example of just how important that part plays. And another thing I didn't mention before, which is I also found really striking, was so since the mine closed, obviously there's unemployment in the broader area, beyond just people working at the mine, of course. But there's now been a uptick in small-scale illegal mining, which is wrongly called artisanal mining, to my mind, because people are desperate. And there's also organized crime groups that then exploit this gap. So for me, that is the main thing, that you would close a mine that is run on most up-to-date standards. You close that mine and then you invite in illegal mining, which is in the middle of the jungle, zero safety standards, exploiting the local people, destroying the environment. So, if you reconcile those two things, then, I can't see that the mine does not reopen. But we'll have to see. The way we got to this point was pretty extraordinary. So maybe the end game will also be pretty extraordinary.
Indeed. I mean, it feels like a firsthand experience from the locals of the real world business of mining. Like just the fact that, to restart this operation, just to hire the people, like these aren't small operations, again, it shows the scale of everything at work. Is there any final thoughts? Is there anything we didn't mention, Frik, that you feel the audience should know?
I mean, obviously, Panama has been in the news for other reasons.
That's a brilliant point. I mean, we never discussed the Panama Canal, but I mean, it kind of factors into this in a weird way, doesn't it?
Yeah. So, and the canal is one thing. The other thing is the ports there, where basically Panama, with a nudge from other powers, is ending the deal with Hutchison, which is a Chinese company who operates the ports. That's still in negotiations, but it's being kind of transferred, or BlackRock will now be running the ports. So American involvement with Panama is definitely, kind of re-intensifying. The Secretary of Defense was in Panama to sign some deals with the Panamanian government surrounding the ports and security and trade and passage. So whether the mine gets swept up in this bigger geopolitical changes may be inevitable, I would imagine that people would rather sort it out before it gets nailed to an even bigger post than it is.
Frik Els, editor-at-large at mining.com. Thank you for joining us and sharing the fascinating story of First Quantum Minerals' Cobre Panama mine in Panama.
Thank you very much.
Thank you once again to Olympio Metals for sponsoring this week's episode of the Northern Miner Podcast. If you want to learn more, go to olympiometals.com.au. And thank you also to Frik Els for the wonderful discussion on Panama and First Quantum Minerals' Cobre Panama mine. And thank you, dear listener, for continuing to support this program. If you want to help out the podcast, please leave us a review in the Apple Podcast directory, share it with your friends, and until next week, take care.